A new survey suggests Canadians are feeling more confident about the economy, thanks in part to optimism over the housing market. The Bloomberg Nanos Canadian Confidence Index rose to its highest level since last June. For more, we are joined by Nik Nanos, Chief Data Scientist and founder at Nanos Research Group. Thanks so much for making time today, Nik.
Great to see you, Jacqueline, and all your viewers.
Thanks. Yes. Okay. So put into context for us first this height for the confidence index reaching levels not seen since last June. Just how confident are Canadians feeling?
Yeah, I know it kind of sounds good, doesn't it? But, you know, when we look at the first part of 2023 and for the last part of 2022, realistically, consumer confidence was underwater. You know, it was net negative. You know, it's a 100-point scale. The numbers were all net negative. So what we've seen now is a score of 50 on the 100-point scale. It's a diffusion index, which means that we are neutral. The good news is that this neutral position for consumer confidence is the best score that we've seen since June 2022. So are the numbers moving up? Yes. Are people exuberant or positive about the economy? No. Are they better than last year? Absolutely.
Yeah. So the 50 level there, just how important is it, or how if we get above that 50 level substantially, is that more in line with historical levels? Like where would we just normally stand if it wasn't a recession and it wasn't a pandemic?
Well, it's usually net positive. But, you know, the thing is what's important is the trajectory. Right now, the trajectory is positive. The other thing, Jacqueline, that's critical to important is that the Bloomberg Nanos Consumer Confidence Index is a forward-looking predictor about 6 months out. What does that mean? That means probably for the next 6 months, it's still going to be negative in terms of consumer confidence because that's where we've been for the last 6 months. But when we get to the last quarter of 2023, it looks like that could potentially be the beginning of more of a normal curve that is in the positive zone.
And when you started to see this pickup in confidence over the past couple of weeks, you point to the timing of the Bank of Canada and the pause that the Bank of Canada did with its interest rate hikes. How intertwined do you think those two things are, the Bank of Canada and its interest rate decisions and Canadians' confidence levels?
Absolutely. They're actually very tightly correlated. You know, the interesting thing is that for most Canadians, their home is their single biggest investment for an average Canadian. And real estate has really buoyed up Canadian consumer confidence, you know, since we started tracking back in 2008. You know, what we've seen right now is that the proportion of Canadians that believe that the value of real estate in their neighborhood will increase is at around 33%. It's up about 7 points in the last 4 weeks. You know, the average it's over the average for 2023, but still below the long-term average when it comes to real estate perspective. So still lower than the long-term average, but it's starting to trend up. And, you know, something like that starts to buoy up consumer confidence, because if people feel a little better about real estate, the ability to pay their rent and pay their mortgage and so forth, then it just creates for a bit of a positive spillover from a consumer spending perspective.
Yeah, how important is that? Yes, you can just assume the importance of being able to afford that roof over your head, but the spillover effect that you mentioned there, Nik.
Well, it's actually quite significant. And, you know, what we saw, at least the consumer confidence numbers absolutely tanked when interest rates started to move and people were worried about the value of real estate and their ability to kind of carry mortgages and stuff like that. So I would hazard to say, Jacqueline, that even stability in the marketplace, you know, perhaps the current interest rate will be the new normal, because the reality is that, you know, interest rates is 0, 1, 2%, 3%, you know, for those of us that have gray hair, that's very low. But, you know, we know that normally interest rates can naturally be anywhere from 5, 6, or 7%. So maybe the market is starting to adapt with what the new normal will be, and it's creating a certain amount of stability. and people are starting to look at real estate and looking a little more positively on real estate, and it's buoying up the consumer numbers.
Yeah, you know, it is interesting because feeling that confidence in the economy because, you know, the housing market may be a bit more stable or prices might be going up over the next little while. It is kind of interesting because for some people, that's not a good thing. You know, it might mean that they can't afford a house and that could be more instability for them in the future. It's an interesting position to be in, Nik.
100%. But I think what I'd like to highlight is the importance of stability. Do you know what? People are a lot like corporations. Corporations want certainty and stability so that they can plan. And I think what I think is emerging is a higher level of certainty and stability in terms of where people think interest rates are going to be. And it's creating a certain level of comfort because then people can figure out how they can afford and what type of home that they might be able to move into. And I think stability is key, not necessarily the level, but the perception of stability in the market and on interest rates, and that allowing Canadians to figure out how they're going to square the circle on the rising cost of housing.